But this is the stock that we're here to talk about today. This is Adobe. This is the value play of the year, I think. This one is not one that I see, I don't think it's going to 20x, but I think that this one is going to be a pretty surefire 20-30% compounding machine for years to come, and for a few reasons. So we look at their forward PE ratio, it's 10.5. Very cheap stock. Their, 12-month trailing PE is 13.81. Market cap is 100 billion. This is not a small company by any means. $224 is their 52-week low. Pretty close to that right now. But Adobe, interesting stock. You guys know what Adobe is. You use Adobe Premiere Pro to edit videos, Photoshop, etc. But highlights from their quarter one earnings, we see AI first ARR more than triples year over year. So obviously not a big part of their actual revenue streams when you look at Adobe. It's actually making money. But their total subscription revenue and RPO actually also increased 13% year over year. So that's great to see. This is great growth rates coming from Adobe. And then record quarter one operating cash flows of 2.96 billion. This company has a ton of money. It's an 8 out of 10 income statement. I would say it's a 10 out of 10, but I give a 10 out of 10 to a company like maybe SoFi, maybe ServiceNow. These companies are growing at 20%. Adobe grows at a modest but great 10%. We saw 13% just this past year, but 10% right here. Total revenue, great growth. You look at the cost of revenue, margins on this company are pretty much 90%, so insane right there. Total operating expenses, you see that right there. Operating income, amazing. I mean, this company, is one of those ones where this is really one of the best business models in the world, and you see a stock with one of the best business models in the world down 30% year to date, and you start to think, maybe it's time to start buying this company. It's down even more, from its all-time highs, but just year to date down 30%. And this is a chart of their EPS growth over the past 5 years. So this is something to take into account. We see that EPS is growing pretty steadily, a little stagnant in between 2022 and 2023. This is slowed down a little bit, absolutely exploded after COVID because everyone was using Adobe. It was the big thing. Everyone thought the internet was going to be the only thing forever. That's how stock market moves in fear. But EPS looks very, predictable. It looks like we're going to go up again next quarter, And consistently beating on EPS, that's what Adobe does on earnings. We see that they're growing at a very continuous linear rate, and they're beating on every single one. You look at their consensus, you look at their actual, and this dates all the way back to fiscal year 2025, quarter two. So this is the last 4 quarters we're seeing right here. And then next quarter, we see consensus probably going to be a little bit higher. So it looks good for EPS on Adobe, and these are going to need to reconverge at some point. I think we are going to see this happen, the stock price and EPS. You look at Adobe's stock price the past 5 years, and then you look at a chart of their EPS, literal opposites, and I think that we're going to see these kind of, begin to move in a similar direction pretty soon here. And then if we look at Adobe's buyback program, this just makes the company that much more attractive. They're buying back $25 billion of their company. It's a $100 billion market cap. They're buying back a fourth of the whole entire company. This is a cannibal stock. That's what they call it. It's literally eating itself up. This company is just buying itself back. It has so much money at such a cheap valuation. And you see right here, this is why they're doing it. We see the timeline. They actually want to do this all the way until 2030. So this could go for a while. And they're making most of their buys right now because theoretically, and what I believe as well, is this is their lowest point the stock will be at. But market rationale, we see their chief financial officer, Dan Dern, stated that the buyback is a direct expression of confidence, which it usually is for stocks like this. Like we saw Salesforce is taking out debt to buy back some of their shares. So, software companies are very confident, and that makes me feel good as an investor, especially putting my hard-earned money into Adobe. See the company's robust free cash flow. They make a bunch of money. They're able to put it back into their company. I feel really good about this. I'm not going to go too deep into it because it is just a buyback. It's not that deep, but at the same time, this gives me a lot of investor confidence, and I feel very good about that. We also saw Figma earnings, which I did want to touch on because Figma is another creative outlet. People use this for the creative marketing teams, personal creators, things of that nature. But this is bullish for Adobe. We saw on the earnings call, the CEO of Figma, Dylan Field, actually reminded Figma investors that AI is a helpful tool for website and product designers and not a drop-in replacement of Figma services. So you can't just, you can ask AI to just make you a website. I have websites for businesses where I've done that and it works, but it's not as great as if you make it yourself. yourself. And we see right here the company that figures out how to harness human creativity alongside AI. Those companies will define what the next era of software and creativity looks like. This is what Adobe is doing. This is what Adobe is positioned to do. And Figma did good on their earnings. We see that the creative sector of the software space is doing well. But I mean, Adobe is implementing AI into their service to a point where it isn't a drop-in replacement, but it is helping a lot for creatives to actually build what they want to build. And my overall thoughts for Adobe, I think that their AI through their Firefly platform, this is doing great. If you look at that, we did see that their ARR actually tripled on AI. So not a huge portion of their revenue, but definitely going to be huge in the future, I think. And as time goes on, that's going to be a big thing for them. I think they actually do switch their pricing model. I hope we see that over the next few quarters. That's what ServiceNow did, a software company that's great, that's been doing great. To combat this AI, obviously the SaaS apocalypse, they actually changed their pricing model from seat pricing to a type of, currency pricing. I'm not sure how to describe it, but like tokens and coins and things of that nature, and time used and actual usage. So I hope we see Adobe do that as well. And also the cost to switch for major corporations is huge. They're not going to want to do this. There's companies that have been using Adobe since the beginning of time for so many different reasons, and the cost to switch, teaching, training, just actually switching that platform over to AI, something that's unproven, wouldn't make much sense. So the fear in investors that AI is going to take over Adobe, I don't really see that happening. And also the CEO change is not huge. I don't see the CEO change being that big of a deal. Obviously, it's not great. I'd rather see the CEO right now continue with Adobe, but I don't think he's leaving because there's there's some things going on in Adobe. The stock price is down 30%. Past 5 years, it's down. You lost money if you invested in Adobe in the past 5 years, and if you invested in the S&P, you made a lot. So I don't think that's a big deal in the long term. I think we do see a new CEO. I don't think he left because it's getting hard. I think he just wants to take a step back. He's an older guy. He doesn't want to be at Adobe for forever. But looks like I'm missing a PowerPoint or a little point right here, but I did want to say that Adobe for the long term, I just have a lot of confidence in it. And obviously this is not financial advice, do your own research and check out Adobe for yourself. But I do have a lot of confidence in Adobe that it is going to do great over the next coming years, over the next decade. I don't see it getting replaced. I do see AI, you look at Sora. I talk about this every Adobe video. I didn't even bring it up, but Sora literally shut down because they couldn't continue to operate it. It was too expensive. It didn't make them any money in return. There was no reason for them to have it. It didn't really benefit people either. They lost 99% of active users after the first month. So that's something to take into account as well. AI native, regenerative film is not the next big thing. It looks like maybe it will be in 10 years, but I think between now and then, Adobe is going to make a ton more money, buy back a lot more shares, and make investors a lot of money. So,
CIO of Tuttle Capital Management. Matthew, great to have you back on this
show. So this is about the AI bubble. We have Matthew Tuttle right here.
Got a nice green day on the board here. Yesterday, bit of a mixed picture, but we did see more records. I'd love to get your thoughts on if this rally can hold and what your thoughts are on everyone pouring into the AI trade. Are we getting dangerously concentrated here, or is this just our way higher?
So, yeah, we are getting dangerously concentrated here, but I'm not seeing anything showing that this is going to slow down anytime soon.
Completely agree with him. I think that, we're probably not going to see this slow down, like you just said, anytime soon. I mean, the stock market's up 8% already year to date, so I wouldn't be surprised if we ended the year up 30%, completely due to AI. And I think we're going to see retail bounce back as well. So be sure to pour some profits in there.
You've got kind of on the bear side, oil up around 100, interest rates higher, Fed kind of has their hands tied, possible stagflation.
There's a lot going on.
But the market's looking at that as something that's temporary. And they're looking at all of this AI CapEx is something that is a multi-year phenomenon. So I'm definitely not going to sit here and try to call the top on this. We think you want to be in this trade. You want to be in the bottlenecks on this trade.
All right. So
totally agree with him right there. I mean, you want to be in AI, even if this is one that, it's already taken off. Obviously, you see Micron, you see NVIDIA, but you do want to be in on this trade. Like, I buy a ton of consumer stocks, great opportunities right now, but my largest holding is AMD. I'm up over 300% on AMD.
We want to be in the bottleneck. So what are your thoughts about this being a bubble? Because I had a guest on the other day saying people are too interchangeably using the term bubble with what he says. It's Nigam Arora, by the way, who says it's mania. this is not a bubble in that we're detached from reality. We are attached to reality. It's just a psychology that everyone wants to be in this trade. What are your thoughts on that?
Yeah, I mean, it could be all of those things, or it could be AI is a game changer. And, in what's going on is what should be going on. So we don't worry about it. You'll know in hindsight whether it was a bubble or not. I think even though if you look at kind of the 2000 to 2002, if you were in the right names, like if you were just buying the, pets.com and things like that, yeah, you got crushed. But if you were in the right names, yeah, I mean, you had a little bit of a drawdown there, but, you were fine long term. You want to make sure you're in the right names here. Don't buy a company just because it says, hey, we're in AI.
Yeah, I totally agree with what he's saying. I mean, if you buy Amazon and they're really using a bunch of AI to propel their business, which what they're doing right now, even if AI is a bubble, you're probably going to be all right.
Sudden, you really need to do your.
But if you buy something like Allbirds, which is a shoe company that just put AI behind their name, and it is a bubble, then you're probably going to get hurt a little bit. I think what he's saying is very true here.
Homework and make sure you're in the right companies. You're in those bottleneck trades that people are having to throw money at hand over fist, and then watch your position sizing. Don't go 100% into AI names, because if we are at the top of a bubble, that's where you get really hurt.
So if we're coming into these bottlenecks, I would bet memory's on your radar, photonics,
Micron,
optoelectronics, anything tied to the infrastructure here. I mean, where are you seeing opportunity? Where specifically, when you say bottleneck, are you focused?
So all of those that you mentioned, the other sneaky bottleneck trade is space, because what we're seeing is nobody wants a data center in their backyard. Where are they all going to eventually go? They're going to go into space. Now, that's not going to happen tomorrow, but that's also why we think.
Very interesting take right there. I haven't heard anything about that, but data centers in space, that's interesting.
We're in the early innings of this space trade. So that's another bottleneck that I think you really want to have exposure to. We launched SPCI, our space ETF, 2 months ago. I think it's up like 50%. It's just been crazy. But we do think that there's more to go in the space trade as well.
I mean, the space trade is certainly something we've been talking about, of course, with the potential SpaceX IPO and the possibility of an orbital data center. As you said, no one wants it in their backyard. People actively fighting them being in their backyards right now, in fact. So as we look at that, and you're talking about your space ETF, what do you have in there? What companies are you specifically looking at? Who are your picks here?
So I think when you look at space, you want pure play. You don't want a company where, all right, maybe 10% of their revenue comes from space. So we're,
Space is a very speculative investment, let me say. I do not have a lot of money in space, let me say that.
Fire, Rocket Lab, Lunar, ASTS. We've got 11 names, and they are pure play space names. You don't want Lockheed Martin and Boeing and all of that stuff in your space ETF.
All right, and then on the memory side of this, because if we want to talk about the other bottleneck, that's the big one with the shortage and demand being so high. How are you looking at that trade? Because we've already seen such an incredible run up there. Is there still space in that trade?
There's still space in that trade because it is such a bottleneck. Do you trade, do you chase the SanDisks and the Microns up here? Yeah, maybe I wait for a dip. The name we really like in here is Penguin, P-E-N-G. Yeah, it's a name.
Never heard of Penguin. I have heard of Micron and SanDisk, but interesting to see what he's about to say.
That is much smaller market cap. It's just starting to gain interest with retail investors. And Hynix took a big stake in them in 2024. You kind of hope that those guys know what they're doing because they're killing it.
And as you look at other opportunities here, I see in the notes that you sent over that you're also taking a lot of look at Halo companies and the Halo trade. Take us through that thesis and who specifically falls under that umbrella.
Yeah, so it stands for heavy assets, low obsolescence. What you're looking for is companies that have assets and that would be helped by AI, not hurt by AI. So, companies like a Freeport McMoran,
So what we're seeing basically is we're seeing what companies are going to be helped out by AI, like you just said right there. But investing in space is, we might have that AI bottleneck where there's data centers everywhere. We're having, neighborhoods of data centers, you get that into space, and then these space stocks are very much going to benefit. But we are very far from getting data centers into space. I don't see that happening anytime soon. So I would not, that's not something that I'd put a bunch of money and lock it up in right now, honestly.
AI isn't going to put copper out of business, but it may allow, copper companies to mine more efficiently. So we really think the whole halo idea is like the new value trade. You can't just buy a stock because it's undervalued anymore, because it could be undervalued because AI is going to put them out of business. So when
the narrative with SAS, which I don't think it's true.
We're putting our money where our mouth is. We're launching HALX next week to really delve into this whole halo trade.
And as we look at this setup that we have, the more macro setup with everything happening in Iran, defense is frequently coming into the conversation with this AI tie-in. How are you looking at defense as an opportunity right now?
So we're looking at defense from two angles. Number one is the convergence trade, where you're seeing kind of next level defense, the Andurils of the world, the Kratos, the AVAVs, bringing in AI, bringing in optics, bringing in cloud, and all of that converging. And, you definitely want to play that trade. The other thing we're looking at, which tinfoil hat, I get it, but, with the administration releasing all of these UFO files, we think that there's technology specifically around free energy and propulsion that the big defense contractors may have, the Lockheed Martins, the Raytheons. So we have an ETF for this too. It's UFOD. It's our UFO disclosure ETF. So we think that's an area you also want to be in.
Matthew Tuttle with some interesting ETFs here, but that's all that I'm going to do for this reaction, to this video right here. It wraps up pretty soon here after this, but definitely some speculative investments. But I think the main thing to take away from this, that AI could be a bubble, could not be a bubble. Who am I to say? But at the end of the day, if you invest in these big names that are going to benefit from AI, no matter whether it's a bubble or not, they're going to get past it. These are huge companies. I'm talking about the Amazons, the Metas, the Microsofts, the Googles, the Apples, things of that nature. They're going to get past AI, even though they have so much money tied up in it. But don't get caught in those companies that are pure AI plays. Just make sure that it's sprinkled in there a little bit. But that's all that I have for the reaction video for today, guys. So if you did enjoy, be sure to smash that like button. Also subscribe to the channel. Thank you guys so much. I'll catch you in the next one. Peace.